Amazing. Thanks for bringing me to the panel, Rebecca. And thanks to Cynthia and Diane for coming and speaking with us about Canadians investing in the two hottest and most popular United States markets. And so it's great to have the perspective of Canadians investing in the States. So we really appreciate you guys bringing that unique perspective because our audience here are Canadians who are interested in investing in the States. And we've got two similar but different markets. So we're going to compare and contrast the two markets, but I'm also going to ask a lot of technical questions that a lot of people are going to have about Canadians buying in the States and potentially some of the differences between some of the state and municipal laws in Phoenix, Arizona versus the Dallas, Texas area. So, Rebecca, great introductions of these two absolute rock stars in the real estate investment space. And I guess the first question I want to open the panel to, and I'll just kind of bounce the question around so we're discussing, but what are some of the most important things Canadians need to know when they're starting to think about purchasing in the States? And Diane, why don't you go first?
Sure. Well, it's completely different than buying in Edmonton. I know in Edmonton, you can get a pre-qualification letter, or you do a little bit about that. When we're buying in Arizona, you have to have a complete pre-qualification when you submit a contract. So I know in Canada and some different places in the US, Cynthia, I don't know how you guys do it in Texas, but we have to have all the financing figured out before we make an offer. So we don't go pick a property and then figure out the financing. It's kind of done in reverse here. So that is a huge difference that I found my relatives in Canada find when they're purchasing in Arizona, because they're like, let's go look. And then they're like, I said, well, we have to get the financing in place first before we submit. So that's a huge difference. And then the whole process, I think, is completely different. And even our verbiage is really, really different than it is in Canada. That's what I've noticed. So that's the big thing. So you really need someone to help you guide you through that, because it's the language, the vernacular is completely different than at home for sure.
Got it. Yeah, borrowing rules being completely different. I know a lot of people are going to have plenty of questions about inter-border borrowing, so I am going to be deep diving into that shortly. And Cynthia, how about you? What are some of the things that, to start the discussion, Canadians should really be aware of when they're starting to think about crossing the border?
Right. So I don't do any of the individual buys. I've done it. So I understand what Diane's saying. It's completely different. So have a good lawyer, have an escrow team, like just have it all lined up for you to do it. I represent a company that's a Canadian company investing in the US, and my investors invest through that vehicle. What they need to have is just a US tax number, file a US tax return each year, and then file your Canadian tax return to make sure you have a cross-border specialist that knows both tax laws. Because mine is purely investing, it's not for use. So it's a little different in terms of what we do for investors.
Well, it's going to be terrific to have two totally different perspectives and two styles of investing. You can buy the whole darn property yourself, and that's some of the expertise Diane's going to bring to the conversation, or you can invest in a company that does a lot of that heavy lifting for you, which is going to be Cynthia's expertise. And, Cynthia, I think that's a great transition into the tax question, because I think one of the questions the audience is going to have is, okay, well, who do I pay taxes to? Where do I pay taxes? How does that work? So could we maybe explore that a little bit in a little bit more detail, Cynthia, about how taxes are going to work as a Canadian? You own this investment security.
It's an investment vehicle, James. So it's a limited partnership structure. You're a limited partner. So when you buy, you have to obtain a US tax number for the first filing. And so if you buy late in the year, you got to rush and get that done. But we do have, like we call our expert team that helps our clients go through that and navigate that. It's a fee, but it's worth paying the fee. So it's set up properly. And then you file a tax return using the documentation that the partnership provides. Again, this isn't whole ownership, so there's a lot of differences. The partnership structure protects people against liability, protects them against, they've structured it so it provides a lot of barriers for the investors to not be exposed to if you're doing it on your own. So I know you can layer it through L Corps, etc., S Corps, and I've heard lots of different structures, and I know Diane's probably a lot more familiar with that side of it for Canadians doing direct investment. Ours is very simple. It's get your number, invest with us, file your US tax return, you'll get a K1, and then you'll get the T5013, which is the Canadian comparable or the the filing. So it becomes just a process. The costs associated are really what I talk to clients about, because if the fees every year to do this and you're not putting a certain amount of money in, it might not make sense. It just, might be not worth paying those fees to do the investment, because they'll eat away at the returns. But that's something that we talk about when we look at the investment, depending on what it is and how much you're investing.
Yeah, that makes perfect sense. Now, Diane, when we're looking at buying that individual house or condo or whatever, how did the Canadians work that tax setup?
Well, we have cross-border tax accountants too, that we introduce people to take care of the US liability as well as the Canadian. We get a tax ID number as well. And I guess one of the differences buying in Arizona is we don't actually use attorneys here. We're one of the few states where the agent actually writes the contract. And our title company kind of acts comparable to a paralegal, I guess. And they hold all the monies and they disperse funds, and they'll hold money back when you sell your property. So if you're not doing a 1031 exchange, then you would use a cross-border tax accountant to take care of your taxes in the US as well as the liability in Canada as well.
Got it. Oh, that makes perfect sense. So obviously it's really important to have the right power team in place. Just like when you're buying in Canada, you want to have a great power team, accountant being one of those. You have to have your interborder taxes sorted out when you're buying in the States as well. Now, I want to talk a little bit more about taxes. And Dan, I'm going to bounce this question to you. In different provinces in Canada, sometimes there's land transfer tax, sometimes there's vacancy tax for vacant property, speculation tax. For example, in Alberta, we only pay GST on goods and services like property management, whereas in BC, we also pay provincial sales tax. So, Dan, can you maybe explain the different taxes associated with owning property that people should be aware of when it kind of comes to Arizona?
Sure. We have property tax here, and it's, I mean, in Phoenix, it's it's a very confusing number, 0.016% or something of the assessed value. And the assessed value is so complicated to explain. Basically, Maricopa County will send you what your assessed value is. It's much less than what your actual purchase price is. And then for rental properties, you just have a city tax, and that we have 17 different cities here, and they all have a different rate. So it's usually around the 1% mark for rental income.
Got it.
And that's it.
And so no land transfer tax, no vacancy tax, nothing like that.
Nothing.
Awesome. Well, and Cynthia, what are we looking at for taxes in Texas?
Texas has no federal tax. So the benefit to that is that when you sell a property there as a foreign investor, the withholdings on disposition are a lot lower than any other market. So if I'm an investor and the property sells, then my taxes, they have a formula. In Arizona, I think it's around 27% that they withhold from the proceeds of sale, and they keep it until I file my tax return in Canada. And then we have a tax reciprocity agreement that once I file, the two governments communicate and my withholding sent to me. So, that's why you have to file your tax return. That's why you have to work with a cross-border specialist. It just makes this whole process seamless, and it occurs. But there is you're out of pocket cash because you pay tax and you haven't got that withholding back. So that has to be factored into the overall plan when you're doing these investments.
Yeah, that makes perfect sense. Okay, so it sounds like, so we're getting questions rolling in. We'll get to those in a second. Now, I want to talk about, we've talked about the tax side of things. I want to talk about the legal side of things. So Cynthia, what is the lawyer going to do to get, what do you need to do from a legal perspective to get set up to be able to invest in your company that you're representing to be able to buy those shares in?
There is no legal requirement. You may want to have your lawyer review the subscription documents and the offering memorandum to understand it. We spend a great deal of time working with clients to explain the document to us, so they understand how they're going to make money, what their risks are, the key characteristics, timelines. And we work primarily with accredited investors, which are high net worth investors that need this part of their financial portfolio. They want to get some American assets, but it is a financial asset that we're selling. It's not a property. So it's a bit different. And to do that, we have to set up an account which has some restrictions on who can invest, and that's through the profiling. And we fill out this account, and it's like a trade in the stock market, although it is called exempt market, and that means that it's not as liquid. You can't turn around tomorrow, invest in this, and sell it. You have to understand the business plan, and typically ours are 5-year horizon. You're investing for 5 years. Along the way, you might see a return of your capital because they do refinance these properties. You will get annual cash flow based on each of the properties.
Yeah, that makes sense. And Diane, when people are looking not in investing in a corporation, but looking at investing in their own individual properties, you kind of touched on it earlier, but will you need a Canadian lawyer, American lawyer, a legal team that's cross-border? Like what are we setting up for clients when they're going to be buying their property in Arizona?
Well, you don't need an attorney unless you want your own attorney to look over the items, but we actually are one of the few states that don't require an attorney in the transaction. And the title company is who holds escrow, and that is who's going to hold the money and disperse funds and figure out your HOA fees. I don't know if people are familiar with HOA. Do you guys call them strata fees in Edmonton? Condo
strata fees in
fees?
BC, condo fees in Edmonton. Yeah, so
Okay.
same idea.
So we call them HOA fees. They prorate the taxes, they figure out the HOA fees, they figure all of that. So we kind of liken them to a paralegal. But in terms of taxes, then that's when you would need, representation for a cross-border tax expert for sure. But in the transaction and the purchase part of it, you don't need that.
Got it.
Yeah.
Now, we're familiar with some of the different legal snags that can happen in the Alberta market and the BC market. What are some of the potential red flags where it's like, oh, that's different in the States, where there's little snags people can run into with the way the contract is structured, the purchase agreement? Like, what are some of the things to watch out for when buying a property in Phoenix that Canadians might just not know because it's a different market?
Well, I don't know what it's like to buy property in Canada, so I don't really know the differences there. I know here it's pretty straightforward and it's actually pretty simple, and our contract is pretty clear. We give a 10-day due diligence period. That is when you have time to do all of your inspections. Once that is completed, well, first of all, once the contract's executed, then you give an earnest money deposit, and that goes to the title company. It's usually 1% of the purchase price. Then you're in your inspection period for 10-day due diligence period. That's negotiable as well, but standard's 10 days. Our whole escrow period is about 30 days. So from contract acceptance to you getting the keys is about 30 days. Then we have an appraisal. If you have a lender, then appraisal will be ordered and you will have the property appraised. If there's no issues there, then you are off and running. It's a pretty simple, fairly easy process. So I know you guys have a lot of contingencies that we just do not in Arizona whatsoever. It's pretty much the due diligence period. And if it passes inspections, that's another negotiation. If you'd like repairs on the property and want to ask the seller for repairs, we go through that. If the appraisal comes in shorter than what the actual contract price is, that could be another negotiation. You ask the seller to reduce the price, or the seller will ask you to come up with cash, or you meet in the middle. That's another negotiation. But those are the other two only times that you can cancel the contract and receive your earnest money back. The only other time is if you disagree with the HOA financials or HOA rules. You have 5 days to be able to cancel if there's something that you feel that the rules are too strict. Maybe they won't allow for short-term rentals, that kind of stuff, or their financials are pretty low and you feel insecure about how the community is or the HOA as a whole. You're allowed to cancel that as well. So I don't know how similar or different that is.
Yeah, no, that was a great description of the process, and I appreciate kind of like spelling it out. So there's obviously parallels, couple of key differences. Now, Cynthia, I'm going to ask a slightly different question because I think it'd be really great for the audience to know. When we're reviewing and offering memorandum for the types of investments that you're representing, what are some of the things that when you're combing through that agreement, you really want to pause, look at, and understand that could be a legal challenge for people that are looking at that type of an investment?
So the offering memorandum really outlines everything about the investment. So you want to read the principles, you want to do your own homework on, who are these people? A lawyer puts together an offering memorandum. The people go in and I think with new compliance rules and the new client reforms, there's a lot more deep dive due diligence on principals and issuers out there because of FinTrack, anti-money laundering. We get a lot of scrutiny. So we're seeing I guess what I would say the cream of the crop, if they've been in the business for 5 years and they're delivering on properties, I feel pretty comfortable that the principals are doing what they have sound reputation. So that's first, and you can read that. There's usually a very lengthy section on the principals and what they've done and how their track record. You want to kind of make sure that they've done the same thing as they say they're doing in the offering memorandum. If they've never done it before and all of a sudden, they were a resource company and now they're selling real estate, I would question that, that's a good that would be a red flag. Key characteristics. How do you rank? What is your priority in return of capital? How is the equity paid out? What is the profit share? So how and when do you get paid? And where do you rank? Are you behind others? Are there a priority ranking? Typically in our structures, everyone ranks equally, with the equity coming out first, and then the profit share split going to the investors first, and finally to the general partner. So that's, in my mind, that's aligned with the investor interest. You're getting your money out first and your profit out first. Secondly, would be risk factors. What are the risks? And, is there something that you should be aware of that may be a nuance to that project? And I look at this particularly with land development deals. I've seen all sorts of different deals that say we're having to go through variance on the official community plan. Well, if that ever is written in a document, that's a much riskier deal than something that's going through a zone development. With the properties in the states that we offer, they're buying existing assets that are old and tired, and they have a system to upgrade, renovate, re-rent, refinance, and reposition in the market and deliver astounding returns. Like we've seen amazing results from a very simple program. Buy an old asset, bring it from brown and orange to gray and black, and put new countertops, new flooring, your appliances, stuff that's cosmetic. I call it lipstick. You're not doing any major renos. You're just really improving all of the amenities and the inside, and people will pay more for that. So, if you use a formula of the cap rate divided by net operating income equals market value, you can start to see the exponential increase in the value for every dollar of rent that you increase in the building. And you can do that through a number of ways. So it's really about having a business plan when you buy the asset, and so that the investors understand that. And that's what we show them in the offering memorandum. So you would look at it, read it, and go, oh, okay, they're going to do 33 units or 53 units, or, they've got under market rents of this much, so they just bring them to market. That's going to increase the value. That's how you value a multifamily building. It's by the net operating income. So that's really the goal. Reduce the expenses, increase the net operating income to increase the value through a business plan, and execute and manage it. So for us, I really focus on risk factors, time horizon, who are the principals, what is the business plan, and what is your ranking and your priority in getting your money out. And those are all sections of the offering memorandum.
Yeah, that's great advice about some of the things to watch out for, especially for the companies we're analyzing. And, you made a comment that's a nice segue into the next point, which is, having the ability to renovate and reposition a building. That really depends on landlord tenant laws in the market. And being from BC, we know that it can be very, very hard to transition tenants in a market like BC or Ontario, where the political climate is extremely landlord or tenant friendly. So I'll bounce it over to Diane to talk about some of the landlord tenant laws. Like if we're doing rentals in Phoenix area, how hard is it to evict a tenant that isn't paying rent? Do you have fixed terms that expire at the end of a fixed term, or do the tenants automatically get to go month to month? So talk to me a little bit about what the landlord tenant law climate is and how easy it is to be a landlord in Phoenix.
It's pretty easy. Now with all the COVID over, it's a lot easier because there was, an issue for landlords, but then they also were getting reimbursed by the government for those tenants that weren't paying. So now it's pretty simple. If you do purchase a property with the tenant inside, you do have to honor that lease. Mm-hmm. And compared to other states like Massachusetts, Arizona is incredibly easy. to get a tenant out there. I mean, I will have you know that there are, people that know how to work the system. So there are situations that it can be more difficult. I use a attorney down here called Dr. Victor, and you pay him $900 and he takes care of it. So that's the easiest way. But it's pretty simple compared to other states, actually.
Okay, no, that's great news. And I mean, that sounds a little more like home sweet home Alberta than it does like British Columbia, for example. So to ask it another way, let's say you've got a tenant and for whatever reason, they don't pay their rent on the first. How many days of turnaround would it take on average to have a legally enforceable eviction document?
Oh gosh, I would have to look that up. I apologize. I don't know that information. But I know that you can proceed right after if it's in your lease that they're 5 days late, that they can start proceedings, but it's not going to take 5 days. It'll probably be 30 after that before you can get the. Yeah.
So like 30 to 60 days would be a kind of a reasonable.
Yeah, absolutely.
Time. Okay. No, that does sound a lot like Alberta. In BC, it can take a heck of a lot longer and tenants can stay a very long time without paying rent, depending on the circumstance. So I'm guessing, knowing what the stereotypes about Texas are like, I'm expecting a fairly similar answer to that question from Cynthia. So tell us about the landlord tenant climate and what it's like working with tenants and whatnot in the Texas market.
Hire a good property manager. Again, I don't know all the laws, even in BC, and I own rental properties here. I hire professionals to handle that part of the business. It is a people business. It's an HR business. The companies that I invest with, again, I'm different. I'm not doing direct ownership. I'm investing through a company, and they have put best of technology in place. They have their own property management. It's a very solid operation. Mainly what they do is they look for markets that they understand who the tenant profile is before they go in, and they make it so that they can actually easily manage through COVID, no question. But there was a process to get recovery and rent relief, just help the residents sign up the applications and get them in. And that's how you can get the money. There was lots of relief agencies. So it's really a management thing. And I'm not going to try to know all the laws in every city. Every municipality has certain nuances. Every state has certain nuances. That's why you hire an expert to handle it for you.
Yeah. Well, would you say, based on your experience in relating with these experts, is on the spectrum of extremely tenant friendly and extremely landlord friendly? How would you rank the Texas market?
I would say the U.S. is extremely landlord friendly, where we are, which is Sunbelt states, Phoenix, Dallas, Houston. They're very friendly compared to what I'm in BC. So, I mean, that's perspective. Alberta, I think Alberta's more like the land of the wild and free when it comes to tenancy and not as protective. So, there is some, to me, that's not, I haven't done property management. I don't do property management. It's not in my wheelhouse. I hire people that have come with good references, have good business operations, and have done a good job. So I've always been happy with the results of our programs.
Awesome. No, that's terrific. Well, now let's get into the good stuff of, what are we looking for in these markets? Obviously, as Canadians, it is technically a little bit simpler to not cross the border. There's a couple of factors you have to consider to get into the states where you don't consider those factors. So there's good reasons to check out these markets. So Diane, when people are looking at investing in Phoenix, what are the types of properties that we're most finding people are getting attracted to as Canadians for investment purposes?
Well, definitely everything has to have a pool, right?
All right.
So, everybody's looking for properties that they'd like to use as once they retire. So we have a lot of Canadians that are, far away from retirement. They would like to make some income and then look at it as a property for themselves to live in when that time comes, and they can spend 6 months here and use the property as well. So, it's single family, one level, usually, under 2,000 square feet with a pool. Palm tree and a saguaro are a bonus, but and they want, we want to look at what kind of rent you can get. I will be honest with you, right now is a terrible time to buy in Phoenix. Our market is incredibly changing. So it's kind of like, wait and see what's happening in the market here before even considering it. We were the, top market to move to. Now all of our demand has gone away and we have an influx of properties hitting the market. So I would hold tight and look at where prices go for sure. So I wouldn't make any sudden moves in the Phoenix area. That's for sure. We have a lot of our, hedge fund investors that have canceled contracts. So we have a lot, the seller's market is ending. So it's soon fast becoming a buyer's market, which is good, but interest rates are so high that that's put a lot of buyers on the sidelines. So we're kind of at a wait and see situation with interest rates being high. That scared off a lot of buyers. So we're hoping, in the next 6 months or so, that'll come down as well. But so I would hold tight because you're going to have a lot of options and a lot of choices to buy. It might be a little higher than you'd like to right now. So I would definitely wait and see what happens here because it's absolutely crazy. I don't know what it's like in Dallas, but we have had a complete turnaround here.
I know it's shifted. There's no question. And it was very, very intentional by the governments to just put brakes on inflation. I hope they do it. I hope that it achieves the goal. I don't know that inflation is only being caused by, runaway prices or labor shortages. I think there's a supply side. So we'll see how it unfolds. I do know that the company I work with is not making any, they're not announcing new acquisitions. They're, saving and conserving resources and working with their existing properties to maximize returns, to carry on with their business plans. In looking at the data, and that's all I can look at. And as I think we're in the first breakout group, it's, you go back to the fundamentals. We are in there is a housing shortage supply in Canada and the United States in certain types of asset classes. And that's what you have to look for. You have to be diligent. You have to look for those opportunities. It will bottom out. I think after every recession or every correction, there's generally a recovery. And I'm with you, Diane. I think it's time to sit tight, be diligent, do your homework, be ready and be poised and be ready to take advantage of, a change in the market because it always corrects more quickly than it goes up. And we've had an unsustainable pace of appreciation, at least in Canada and the markets I've seen in the US. These price appreciations are crazy and it needed to sort of slow down. And that's what's happened. And hopefully they'll manage their way through it if we don't hit a deep, and we don't hit another deep correction in the US, which they don't envision. I mean, I've read a lot of stuff about, what they're doing now is really to slow the inflation rate down, and they're doing it very quickly so that they can avoid a long, prolonged downturn.
Yeah, that makes perfect sense. And you know what? It's really a wait and see time for a lot of investors, unless there's a deal that's compelling enough to make people want to jump. Now, I do want to work on your expert knowledge in the markets you guys are working in. So I want to zoom in one more level. So we talked about the macroeconomics of each of your particular cities, but Diane, for example, if we hopped on a plane and came on down to Phoenix, I'd say, okay, where are your hot pockets where it makes a lot of sense to invest? Or is there a suburb where the income property scene is really, really strong? Like give us a little golden nugget of, some local knowledge on where we should be zooming in on for people that are curious about learning a little more about investing in Phoenix.
Well, everywhere is pretty strong here. Anything under 500,000, which is actually hard to find, is a great sweet spot for a rental. And more could be coming on the market. So in terms of areas, I mean, we're getting such an influx of people from California and all over the US because of the political climate, and Arizona kind of being the Wild West in the last 2 years being really open. There's a lot of people from other states that are a little bit more restrictive that are finding Arizona more desirable. So we've had a huge influx, and with the political structure and tax structure in California, we've had a lot of Californians come, and Texas, I'm sure, has experienced the same. So we still have a lot of, business development and a lot of companies investing in Arizona. So, I mean, there's just a lot of great areas. There's 17, so it's really hard. Scottsdale is your most expensive, but you pay a little bit more. You're always going to have, it's an international destination, and investing there is always a great idea. Even though it's going to cost more, you're going to get more in rentals. You're going to get more in short-term rentals and long-term rentals just because it's so desirable. It's like the hot girl in high school. Scottsdale doesn't really have to do anything to work on its personality. It just is. So that's always a good thing, but there's a lot of great, more affordable options, and the valley's still growing at a huge pace. So, I mean, I would say stay away from South Phoenix. I'll tell you what to stay away from, and everything else is actually a good idea. So Levine is a good option, which is in the Southwest Valley, because that's affordable. They've got a lot of new builds there that if you can get into on a new build, the appreciation there is still pretty good. And yeah, there's just a lot of opportunity. I mean, not today, but soon there will be, when we see where prices end up.
That's terrific inside intel. And yeah, I mean, okay, South Phoenix, every city has its to avoid part of town. So even that's really great insight. And Cynthia, when we're looking in the greater Dallas area, and I know you mentioned Houston as well, what are the neighborhoods that
we really
you
like
guys are
Plano,
targeting?
and we really like that whole northwest quadrant in Dallas. Have quite a few properties that, you know, our investors are in, so we know the market intimately. And we're seeing growth, and we're seeing tech jobs move there, which are higher paying jobs. And again, Dallas is very business friendly. So it's attracting a lot of those companies out of California, you know, with business tax being not as much, and also state taxes. So they're just a low tax state. And again, jobs are there, jobs are growing. We work with assets that our audience is the workforce housing. So it's kind of predictable. It's, you know, you can follow this trend relatively easy. You just have to know what to follow.
Yeah, that makes sense. All right, well, we're getting close to wrapping up here. So the final question I'm going to ask is, I know there are people tuning in and people watching the recording whose interest has been piqued in investing in your market. So last question I have is, Diane, what would be the most important first step for a Canadian investor to take to start working with you to scope out some opportunities in Phoenix?
Yeah, I'm ready.
Call me. You know, I'll send you a buyer advisory, which has a lot of great links to the differences in Arizona and what to expect when you're purchasing here and what to do. It's an excellent resource with a lot of great links that gives you a lot of information about Arizona and buying here and living here. If you want to have a property where you can rent out short term, which a lot of my clients do, and then they book out and block off when they like to come visit, and they have the best of both worlds. So short-term vacation rentals are really a great option down here, because you can use it yourself and write off your flights to Arizona, write off everything. So it's always a good option. So yeah, give me a call.
Terrific.
Yeah.
Cool. Well, and we'll put your email in the chat here, because I think that buyer's guide that you described sounds like an amazing resource. And so, you know, for everybody that wants that guide, either give Diane a call or fire off an email saying, send me that guide. And Cynthia, how about yourself? What's the best first step someone can take to learn a little more about working with you guys?
So people understand what I actually am offering them. And it is an investment. It's a financial asset. You're not going to live in this property. You're going to invest. So it's an investment. So it's a bit different. And yeah, I do a lot of consults, complimentary, talk to you, it might work, it might not. And maybe it does, maybe it doesn't. So just reach out, either email or phone, and we can connect.
Cynthia, do you have a minute? I just had a question for Cynthia. Do you have a minimum that you require people to invest in?
We require 25,000 US on the US, but they have put together a fund that's Canadian dollar based, and the minimum is also 25, but it's Canadian, and it does qualify for RSPs and TFSA's registered accounts. So, and it's not restricted to an accredited investor. So there's some nuances. Again, I'm happy to, talk to people to make sure they understand completely. No obligation. It's an investment, though. It's not a place you're going to go and live in.
Awesome.
And actually, just so you know, Diane, they're the second largest multifamily landlord in Phoenix. So we love Phoenix. In fact, we're doing a Phoenix investor tour October 22nd. So maybe there's a way to do a joint event, and they can go. People want to live, they can go out with Diane, and people want to look at investments, or both. You know, it's a great market. Certainly has done really well for our investors.
Awesome.
That's terrific information. Well, hopefully you two can take that offline and add more product type and more local knowledge to really give people better options for investing in that marketplace. And thank you both for taking the time to speak to people about two of the most interesting, intriguing, and profitable real estate markets in the States. You can see there's some differences and some similarities. And obviously, real estate investing is complex. And so the best thing to do is, if you're curious, reach out, book that conversation, and learn a little bit more.